So we'll start the discussion on mutual funds. So a mutual fund is just like we have shares. We discussed about stock market and shares. So we have a investment option called mutual funds. It is related to stock market in a way, but that is not the only investment avenue. Mutual funds invest in various other securities, including debt instruments and shares also. So equity instrument, they are equity mutual funds, debt-based mutual funds. We'll see all of this in detail. But for the moment, think of mutual funds as a pool where a lot of people put in their money. Say there are 100 subscribers, and each one of them put in some money. And this is not lot of money. Okay, this is not in lakhs or crores. Even common man can invest in mutual funds. Maybe you can say invest 5,000 in a mutual fund. So people will be, according to their capacity, will be investing in the mutual fund. On all this money will be pooled. Okay, so say there are lakhs of investors, small amount, and they will be pooled into one common large funds. Okay, and that fund will be invested in a number of investment options, and there will be a person, there will be a company called the asset management company that manages this pool of funds. It will make decision on where to invest so that best return can be obtained. So it will select the stocks into which company stocks they have to invest, or even whether they should even invest in mutual fund in equity or not. Maybe debt instruments are much better from a safety point of view. So they will manage this a balance. They take a balanced view between return and safety. So while equity instruments like shares give higher return, they are quite risky, whereas debt instruments offer lower return but they are more safe. So that balance will be taken care of. And all this where to invest, when to exit, these decisions will be taken by the company managing this funds. So that is what a mutual fund is. So this is an opportunity for the common man to invest in stock market. Normally you can also invest in stock market directly, but you don't have any professional expertise. So either you have to go through a broker, but again, broker, say you have 10,000, how many shares you can buy with 10,000? Okay, so say a share is 100 rupees, so you can buy 100 shares. And say some company shares, some very good company shares, maybe say it's 1,000 rupees, then you can buy only 10 shares. Okay, with that your 10,000 is exhausted. You cannot invest in other companies. Whereas with this option of mutual funds, because there is a lot of money is pooled, that pooled amount is a large amount, and that will be invested in various other companies. So maybe they'll invest in 20 companies. So you get the benefit of all those 20 companies. Okay, so proportionately your share in each will be less, but because the pool of money is large, okay, you get the benefit of, if all the 20 companies do well, so your return will be higher. Okay, so in this chapter, let us discuss about Unit Trust of India, UTI. This is a financial organization created by the UTI Act, passed by Parliament in 63. So today we have a number of options, but this was not the case earlier. Okay, earlier only UTI was the only option. This is a government mutual fund, is run by government, and it has various products, and the most popular product and the best performing one was a scheme called US 64. So US 64 distributed dividends on a regular basis. So dividends means just like when you have a stock of a share of a company, you'll be entitled to dividends. Similarly, for mutual funds also, you'll be entitled to dividends based on the performance of the underlying fund. So this scheme US 64 used to distribute dividends on a regular basis, and was a very popular investment option for many small investors also. Okay, but subsequent to 2001, till 2001, it was doing very well. But after that, there was some problems, like the stock market was declined, and then there was this scam called Ketan Parekh scam. Okay, so due to all these reasons, the NAV, we'll discuss what is NAV. That is net asset value. We'll discuss what it is. So that is the figure used to see how well the fund is performing. So for this scheme, the NAV fell substantially. Okay, and because this is a big institution, a lot of small investors are involved. So to protect them, and also because this is such a big institution, will have its failure will be having an effect on the entire market. So to protect them, UTI was bifurcated into two parts. This history is not that much important to you, just for information. So UTI was then bifurcated into two parts. One was a UTI mutual fund that was created as a mutual fund, just like any other fund. And then the schemes of UTI where government gave bailout package were taken out directly by the government. They created a special specified undertaking, UTI, SUITI. And regarding US 64 scheme, an exit option was given to small investors. So in exchange, government bonds were issued to the investors of US 64 scheme. So we now need to focus only on the first part, that is UTI mutual fund. Okay, so UTI mutual fund is one of the mutual funds operating in India. This is promoted by SBI, LIC, Bank of Baroda, PNB. For your interviews, the only questions will be asked is what is Unit Trust of India, and maybe they can ask you for the sponsors of UTI mutual fund. That is an advanced question. But if they ask you, the sponsors are State Bank of India, LIC, Bank of Baroda, PNB. They each hold 18.29 stake in the paid up capital.